Very good afternoon, everyone. I hope my voice is audible. You can comment on the chat to say yes or no. Yeah, good evening, Mr. Rio, Mr. Alvin. Yeah, good evening, Mr. Anand. Yeah, good evening, Mr. Abhishek. So we will start off shortly. I'm just waiting for a few more of our audience to join in. Okay, we have a few more joinees. Mr. Prabhakaran, very good evening. Mr. Balaya, good evening. So, audience, as we wait for a few others to join, I hope you're able to see my screen, and I hope my voice is also audible and clear. We also have our speaker with us on backstage, and we will shortly introduce him and hand it over to him. But as you all know, the topic for today is obviously the latest or the new GST changes that have happened as of October 1st. And also circling back to the 52nd GST Council meeting, we will have the highlights spoken about. What is it that you're looking forward to today's session is something I'd like to hear from all of you. So I will leave the chat open for all and request all of you to be engaged in conversation with us today. And I look forward to your responses on chat. So over to all of you. We can have it from all of you here. Mr. Anand, Mr. Venkatesh, any of you. Mr. Sanjeev, very good evening. I missed your name. Yeah. So, what is it that you're expecting from today's session, and what do you think will be covered in today's session, aside what I had mentioned? Okay, audience, anyone? Any specific notifications that you're looking to see today, or is there anything else that you'd like to cover? Also, I'd like to mention that obviously, as every other session of ours with Mr. Akela goes, we will have an exclusive QA session as well towards the end of the webinar. Mr. Nagaraj says, any changes in getting ITC and GST refund? Okay. Mr. Nagaraj, we will address that. Anyone else? Anyone else like to see a few more expectations from today's session? Okay, Mr. Gajendra Kumar has raised his hand, I think. Mr. Gajendra, would you like to directly talk? I will be able to allow that. Or if you want, you can mention on chat. Okay, I will just enable you to talk, sir. Yeah, Mr. Gajendra, you can unmute. Yeah, sir, I cannot hear you. Okay, not able to hear you, sir. Yeah, otherwise you can just mention on chat, no problem. Okay, Mr. Srinivas says ITC reversal in GSR 3B monthly. Okay, great. Mr. Gajendra, introducing electronic credit reversal and reclaimed statement. Okay, that's an interesting one. We look forward to all of this. Let's see if these are covered in today's session. I think we can get started, audience. Once again, thank you all for your patience. Very good evening to everyone here. I do believe we might have some repeat audience with us today here. Okay, Mr. Venkatesh, notification on permanent reversal of ITC. Okay, great. Looks like we have at least a bunch of responses. Good to see them. All right, Miss. Okay, online gaming GST. Okay. All right. All right. So let's go forward. So before I hand it over to Mr. Akela, I'd like to introduce myself and the company I represent. I'm Siddharth Nandakumar. I'll be the moderator for today. And I will also run you through a couple slides of our company portfolio, followed by which I will introduce our speaker for the day and hand it over to him. Audience, just give me one moment. Okay, I hope you're able to see my screen. Sorry about that. All right. Audience, if you can quickly confirm if you're able to see my screen, I'll go forward since I reshared it. Okay, thank you. Thank you. Okay. All right. So moving forward, as you can see, this is a quick timeline of our company. We were initially part of Wipro in the years 1980s to 1990s. In fact, until 2000, we were part of Wipro. We were the peripherals division manufacturing of the company Wipro. When I mean peripherals, printer, toners, cartridges, that is something we were dealing with, and other parts as well. And we were also widespread known for the DMP, that is dot matrix printers, which were very fast moving back in the days. And in 2000, the company decided to become a separate entity, which means they decided to come out of Wipro and name themselves a different company name in the name of Wipro E Peripherals. So from there on, the company obviously has carried forward the printing business. And in over the years in 2017, 18, 19, we unveiled our digital solutions lineup, where we have a bunch of digital services solutions for enterprises. Mr. Ravindra, I'll just check. I think just let me know if it's fine. Our audience, are the rest of you also facing this issue? Or I hope my voice is audible. Okay. All right. Yeah. Thank you. Thank you all. Mr. Sanjeev, sorry, Mr. Ravindra, you can just check your volume if because I think it's fine for the rest of them. Yeah. As I was talking about the company, we have our own digital services lineup, and in 2020 there were a few other changes, and in the most recent times we have undergone a complete brand rebranding journey itself. So today we are known by the name Websol, and we have a new portfolio as well. Moving on, a few highlights of our company. We have close to 23 years of industry experience. We have close to 530 enterprise customers. We also have close to 1 lakh retail customers, and we are present in over 2,500 service locations in India. and a quick view of some of our core clients at the bottom. Please note that these are enterprise customers. All right, moving on. Yeah. Now, this is our solutions lineup. I will not take too much time here. We have our portfolio, that is the business suite, which is called FluidWorks. So under FluidWorks, we have multiple solution offerings for various designations, for various departments, for various business roles. So I'll explain what these mean. So under FluidWorks, as you can see, we have different solutions. Under that, we also have a GST solution, which I'll explain, which might be relevant to all of you here today. We have something called Fluid Pro. What this means is we provide managed IT services. As simple as that. What that means is we will be able to provide you and completely deal with your entire infrastructure, your IT infrastructure, which deals with servers, server racks, the cooling necessary for it, and your other IT assets as well, like your access points, Wi-Fi's, all of that will be taken care by us completely remotely, and you will have our service engineers as well who will support you on a 24/7 knock support. So that is on the Fluid Pro end. Moving to Fluid Print, as the name suggests, this is a printing service which we are known for. Basically, we offer managed print services for B2B customers. What this means is, assume that you have a requirement of 100 printers. We'll be able to deploy 100 printers or more than that without you having to pay for the cost of the printers. You will be paying us for what you print on an operational basis. So based on the number of papers you print, you will be charged. Aside this, we will take care of your remote monitoring, uptime, downtime, all of that is taken care of. And we are present in over 2,500 service locations. Moving to Fluid Map. Now, when I mean Fluid Map, this is an IT asset management service. Now, as I mentioned, you will have 100 to 500 printers. How do you manage these 100 to 500 printers from one location? This is where Fluid Map comes into picture. This is a tool which will be installed in your server, in your network, and we will be able to enable you to track all the printers. And lastly, we have Fluid Trail. This is basically a workflow automation solution where we can automate n number of processes for your organization, irrespective of the department. We have automation ready for HR. We even have automation for your finance department, procurement departments, and you can even store documents on the go. And moving on to the last solution before I hand over and hand it over to our speaker for the day, we have a GST solution as well, which might be relevant to all the audience here today. It is called Flowtax. What this means is essentially we have an all-in-one solution for everything GST, right from your reconciliation, filing, e-invoicing, e-waybill automation, a 3B, 2A filing, all of that is taken care through our solution. We in fact hold the license from the government called GSP, which is a GST Suvidha provider. So this is our managed GST solution. And lastly, as I mentioned, we also have presence on the retail end. I will not be talking much about it today. So as I was explaining about our GST solution, I would like to know that if any of you are actually exploring any GST solutions at the moment, what I'm going to do is I'll quickly launch a poll for all of you. As we will not be doing a demo as such during the webinar, as this is a 100% knowledge only webinar. So we will not be doing any demo. So I'd like to know if any of you would be interested in a free demo of our solution Flowtax. I will leave this poll on for the next 1 minute. Please note that based on our availability, we will be able to arrange a free demo of our solution. And we will also be able to explain to you what are the different features we have based on your requirement. We can do this as per your availability whenever you are, based on your availability, that is. All right. I understand that some of you might already have a GST solution in place, but if you are looking for exploring the solution and finding out if there is a potential solution that we can consider for the next financial year or so on, we will still be able to show you a demo of a solution, and happy to help. All right. Thank you so much for your response. I'll end the poll right now. Great. So moving on, let me introduce our speaker for the day, Mr. Akela Prakasha Rao. Yeah. So Mr. Akela is an independent tax advocate. He graduated in 1989 from BITS Pilani, that is Birla Institute, in electricals and electronics engineering. He's also a gold medal holder who completed LLB from Andhra University in the year 2001. Mr. Akela is certified fraud examiner as well, but currently not active. He's worked in the CBIC, that is Central Board of Indirect Taxes and Customs, from the years 1994 to 2008. He's worked for KPMG Bangalore from 2008 to 13. His other major stints in his career were with Toyota Kirloskar Motor Bidadi from February 2013 to November 2016, and lastly Biocon from the years 2016 to 2021. Mr. Akela is also a member of various indirect tax committees of various trade bodies like BCCI, CII, FICCI, to name a few. He is also an active article writer in various platforms such as TIOL, Tax Sutra on various tax issues. Now, aside doing regular webinars with WebSol, he is also a speaker and panelist on various forums on indirect tax matters. Mr. Akela comes with more than 28 years of experience in the field of indirect taxes, with exposure in government, consultancy, and industries like auto and pharma. He comes with hands-on experience in GST, customs, FTP, SEZ, central and state excise service tax, to name a few. He's currently practicing as an indirect tax advocate, assisting a large number of clients on all aspects of indirect taxes at all levels. In fact, if any of you are looking at any sort of indirect tax services that needs to be taken care for you, be it your organization or individual, I think Mr. Akela is the perfect person to reach out to. So post the webinar, I will obviously share his contact and mail ID. You can reach out to him. I take great pleasure in introducing him on yet another webinar with us. I'm sure the audience is looking forward to hearing directly from you, sir. Thank you. Over to you, sir.
Thanks, Siddharth, for those introductory words, and thanks for all those audience who have taken time off from their busy schedules, and because this is a beginning of a long weekend for you, and we are in the midst of the Cricket World Cup also, and today there is a match in Bangalore also.
Right.
So it's a very interesting times, but nevertheless, that you have taken time means that yes, the importance that you have given to the changes that are affecting our lives from 1st of October. And also couple of changes which were introduced after the 52nd GST Council meeting. But unfortunately, we thought that we could cover enough on the 52nd GST Council meeting, but only the notifications have come in the started coming from this morning only. So to the extent possible, maybe that I will try to cover them also. But today the webinar agenda happens to be a very big one. But kindly bear with me, maybe that I'll be a little fast in reading out this, because that this copy will be available to you later. But what I would like to see is that to answer your questions, because that I don't want you to have a spoiled Dasara vacation with some questions remaining unanswered in your minds. So that would be my endeavor today. And as far as this Q&A are concerned, that I request you to please pose your queries in the Q&A box, so that it will be easy for us to, at the end of the session, to go through them. And definitely, if time permits, then I will be able to interact with you also on a one-on-one basis also. So there are quite a number of issues that were impacted from 1st of October. So I don't want to go through the webinar agenda, rather than I will be touching the points only. So Siddharth, you can go for the next sheet.
Sure, sir. Agenda or indirect?
Agenda also we can skip, and then we can go to the next sheet. Yeah. So these are the changes which are going to be impacted from 1st of October 2023. So deletion of liability and import of ocean freight in the CIF imports. So there are 3 notifications which got issued 11, 12, 30. So all these notifications are issued on 26th of September 2023, but towards the same goal, that the 11 removes the inbound ocean freight services provided by a person in non-taxable territory to non-taxable territory from the relevant entry in the IGST notification. And similarly, the 12 of 23 removed the exclusion of inbound ocean freight from the exemption provided for services by a person in non-taxable territory to a person in the non-taxable territory. And notification 13 is removes the entry related to the liability of the importer under RCM in such cases. So what is sum and substance of these changes is, previously that ocean freight has become a big debate, that there is an RCM. So whenever that the CIF contracts are there, already the ocean freight is forming part of the CIF value on which the import duties are paid. But nevertheless, government in their wisdom has thought that this on a standalone basis requires to be put under reverse charge mechanism. So RCM was levied on these things, that importer was required to pay the GST under the RCM on 10% of the CIF value in case the ocean freight is not separately identified in the value. So this led to a double taxation, and the matter has been appealed by the Mohit Minerals, and the Gujarat High Court has given a favorable decision. Ultimately, the matter traveled to the Supreme Court, and Supreme Court has upheld the decision, and government took their own time to implement the Supreme Court's instructions. And now that we can see the light of the day. So from 1st of October 2023, there is no need for paying a reverse charge mechanism on the ocean freight. So that is what the sum and substance of the whole discussion. So next slide, please. So this is what it looks like now, that if you see the location, service provider, service recipient, place of supply before and after, ocean freight before and after, and air freight before and after, what is the tax. So if you see that a service provider who is in Karnataka is rendering services to outside Karnataka, then place of delivery and location of the recipient. These are the things that you need to understand. So once this table is there, it will give you the complete picture. So if the place of supply is outside India, then it is zero rated. But now, after the amendment, if it is outside India, there is no change. It's going to be zero rated only. Air freight, it is zero rated always. So similarly, outside India, inbound, outbound, both are captured here. So if you have this sheet before you, then everything will be clear. So I do not want to explain each and every scenario, possibilities and all that, because it is available right before your eyes. Next slide, please. Yeah, composition levy is extended to the e-commerce goods suppliers, but it comes with its own restrictions. The composition scheme, previously unavailable to the registered persons supplying goods through e-commerce operators, is now extended to them. But what is important to note, that registered persons engaged in the supply of services through e-commerce operators are still restricted from availing this benefit. So the relevant notification would be 36 of 2023. So that you can refer to. And similarly, there is a clarificatory amendment concerning the payment to suppliers within 180 days. That is concerning the section 16. To align the language of the law with the return filing system, it is provided that where a recipient fails to pay to the supplier the amount towards the value of supply along with the tax within 180 days from the date of issue of invoice, an amount equal to the ITC availed by the recipient shall be paid by the recipient along with the interest payable under section 50. The pre-amended provision provides for payment of ITC as an addition to the output tax liability, whereas post-amendment, it would be payment or reversal of the ITC. So the interest computation has changed from section 53 instead of section 51. So that is the only change in this. So payment should be done to the supplier only and not to any third person. And payment made to other than the supplier will not be eligible for a reclaim of the ITC. So what we need to keep in mind is the regulation that you should pay for the receipt invoice within 180 days from the date of invoice remains. But what is important for you to note are two things. One, that the payment should always be made to the supplier only and not to any other person. And the second point, what we need to understand here is, if it is not done earlier, it used to be that whatever is the amount that we have to reverse will be added to our output tax liability. But instead of that, now it will be a payment or reversal of the ITC. So because of this change, the interest section, subsection will change. Interest remains under section 50 only, but there is a change in the subsection. That is what we have to understand from this. The next slide, please. So inclusion of sale of warehouse goods in the value of exempted supply. This is one other important thing. Those who are dealing with imported goods, when the imported goods are parked in the public bonded warehouses, then if there is any sale which is happening within the bonded warehouse, then such a sale is going to be treated as exempted supply in our hand, and all the input credit in relation to such an exempted supply needs to be reversed. So this is a very important change. If anybody is dealing with bonded goods in a warehouse. Similarly, then another important blow for all those big companies who are into CSR activities, that there is a specific inclusion in the section 5, 17.5 FA, clause FA of the GST Act relating to the corporate social responsibility, wherein that they say that the ITC for the expenses incurred towards the corporate social responsibility are not going to be eligible. So that's a very important amendment. But what happens for the past period till 30th of September, if you have incurred some expenditure for CSR, and if you have already availed the credit or waiting for a clarification from the government, now the government is clarifying that because of the introduction of this new clause into section 17.5, they say that it is going to be applicable from 1st of October 2023, and ITC is blocked for CSR activities. So the government's intention must be clear. That's how that we have to read it, that till 30th of September 2023, the ITC can be avoided, but not thereafter. Similarly, retrospective overriding effect of section 23(2) on sections 22 and 24. This is with regard to the registration, that the threshold limit cases and the mandatory cases, and it's noteworthy that the persons exempted from the registration under 23(1) are not going to be benefited by this amendment. So it is just a change in the section for those who have taken the registration or that who are having a problem with around the registration, but otherwise not for the regular SSCs. Next slide, please. Yeah, time limit for application of revocation of the cancelled registration. Now that the previous time limit of 30 days prescribed under section 13 has been omitted. Instead, now the time period prescribed under section 23 has been extended to 90 days from the date of order of cancellation. So additionally, the commissioner has got the authority to give a further extension of another 90 days. So it is going to be 180 days. So if in case the registration is suspended, then we can apply for revocation within 6 months with proper reasons. 90 days the normal course, and 90 days with specific reasons and approval from the commission. Similarly, limitation on the filing of the returns. See, registered persons will not be allowed to furnish the GSTR 1, 3B, 9, 9C and 8 after a period of 3 years from the due date of furnishing the relevant return. So if any returns are missed to be filed, so now the time limit is going to be 3 years from the due date of the furnishing of the returns. So within that time, better that you complete this compliance. And refunds and interest on delayed refunds. According to the amendment, section 54 has undergone a technical change to align with the current scheme of ITC availment on self-assessment basis. Provisional refund of ITC in the case of exports is omitted. You know very well the reason, because that previously that there used to be a provisional input credit 20%, 10%, 5%. Gradually it has been reduced. Now such a provisional ITC is not there. So even the provisional refund 90% should be issued within 1 week and all. So such provisions are now omitted. Section 56 specifies that interest on delayed refunds will be granted subject to certain conditions and restrictions. The manner in which interest will be prescribed is also mentioned. It has been amended now to exclude the period of delay caused due to SSCs in computing the period of 60 days for calculation of interest on payment of refund. So if the refund has been granted after 60 days also, if the amount is not credited to you, then only the refund clock will start. That is what is the important learning for us from this amendment. Next slide, please.
Sir, if you don't mind, I'll just launch one poll.
Yeah,
and,
please.
you can continue with the slides. Okay. Yeah. So, audience, I'm going to launch a poll. We have a series of polls. So here's the first one. The 52nd GST Council meeting discussed reducing GST rate on certain items. Do you believe these rate reductions will benefit consumers and businesses? So I will leave this poll on for the next 1 minute. I'd like all of you to respond to this, and we can actually debate on this.
There are only 12 participants who are active. Rest are do not want to. Good to see 2/3 of the participants are active.
Absolutely, absolutely, sir.
Can we expect some more, or we can close the poll?
Yeah, I think we can close the poll, sir. Obviously, most of them are saying strongly agree and agree. I'll anyway share the results for all of them here, just so we can see. Okay, so nice to see that a majority of the chunk feels that these rate reductions will benefit consumers and businesses.
Yeah.
Oh, sorry,
So,
I don't think I shared it. Yeah, I hope now you're able to see it, right? Okay. All right, so I think we can move forward. I'll share the next slide, sir.
yeah. So assessment of unregistered person, section 62, an important change pertaining to the period within which a taxable person must furnish the GSTR 3B or GSTR 10. In case of best judgment assessment, the period has been increased from 30 to 60 days under the best judgment assessment for effecting the deemed withdrawal of the best judgment order. Beyond 60 days, additional 60 days has been extended subject to the payment of additional late fee over and above the standard rate fee. So this is basically the extension given for the assessment. And the inclusion of non-taxable online recipient, a significant inclusion to Rule 64 is the term non-taxable online recipient. This change expands the scope of Rule 64 to cover more categories of recipients, thereby promoting greater tax compliance. It has got a telling effect in the case of OADAR service providers. So that we will see in the coming slides. And the penalty for certain offences, these provisions apply in the cases of contravention of the provisions relating to supply of goods made through e-commerce operators by the unregistered persons or the composition taxpayers. So they have amended some penalty provisions under this notification 37 of 2023. So I'm just touching upon these notifications so that if you are really interested in any of them, we can have a detailed discussion certainly. But because the changes are too many, I am not going into details of it, but I'm touching upon so that if anything really impacts your day-to-day operations, I'll be very happy to discuss further. Next slide, please. Yeah, punishment for certain offences, section 132, which deals with the punishment for certain offences, has undergone several amendments. Some offences specified under class G, J, K from 132(1) have been decriminalized. There is an amendment in the monetary threshold for initiating prosecution proceedings. Threshold has been amended from 1 crore to 2 crores for launching prosecutions. So, imprisonment, launching of prosecutions, imprisonment, all these consequences will follow only if the amount involved is more than 2 crores, except for the cases involving fake or bogus invoices. But in the case of fake or bogus invoices, right from first rupee, that we have to be very careful. So other than those cases, it is going to be, threshold limit is going to be 2 crores. So fake invoices, the threshold limit happens to be 1 crore only. So one needs to be careful about it. And the compounding of offenses also, that there was a very different kind of method provided for computing this compounding of offenses. Now that they have eased the whole process, so it is a very easy case. Of course, the fake and bogus invoice cases are not allowed to compound. And the amendment reduces the amount for compounding of various offences, except for the one on the fake invoices. So the minimum compounding amount is 25% of the tax involved, and the maximum is 100% of the tax involved. The notable change from the previous minimum of higher of 10,000 or 50% of the tax involved, or a maximum of higher of 30,000 and 150% of a tax involved, all those provisions are done away with. Straight, it is going to be 25% of the tax involved. So it's a very important change for compounding of offences. Next slide, please. Yeah, consent-based sharing of information. See, this is another thing which is impacting without not many people realizing that in what way. See, here what is happening is that whatever information that you are furnishing on the GST portal, it is being shared by the government with other governmental agencies like Enforcement Directorate, Income Tax, etc., etc. So one needs to be very careful while taking registrations or while submitting the data, that it should be accurate and it should be supported by way of our transactions and the books. Similarly, retrospective applicability of Schedule 3. This is one schedule which always will be picked up by the government for making changes. So there are several retrospective changes that were made. So these changes concern the activities of the supply of goods from a place outside the taxable territory to another place outside the taxable territory, IC sales, supply of warehouse goods before their clearance for home consumption. Just now that we have talked in the initial slides that now the sale of bonded warehouse goods in the bonded warehouses are now included for reversal of the input credit on a pro rata basis. So this is in addition to the already existing entries like IC sales and all. So these are the changes which are going to be having a retrospective effect, that as if that they were there in the law right from introduction of the GST, that is 1st of July 2017. So, but if anybody has already paid the taxes, then all those taxes are deemed to have been paid, no refund can be granted. So that also that they have made it clear. Now, while discussing on a point wherein that I have told that the OADR services definition, it has got an impact. Now that they have changed the definition of OADR services, wherein essentially automated, involving minimal human intervention, these words were removed. So the definition has become more inclusive. Next slide, please. So this is another important thing which is going to impact our lives. Aggregate turnover, if it is more than 5 crores, then the 6-digit HSN will be applicable for invoices and e-way bills. Similarly, if the aggregate turnover is less than 5 crores, then it is going to be 4 digits for the e-invoices and the e-way bills, which is going to be mandatory from 1st of October 2023. Next slide, please. Yeah. So there is another big change in the relation to the place of supply of transportation of goods. Already one point that we have discussed, that regarding the ocean freight, but in relation to the others also, there is a change. The section 12(8) proviso has been omitted. As a result, the place of supply, irrespective of the destination of the goods, will be determined based on the location of recipient. So if the recipient is a registered person, half of the tax shall accrue to the state where the recipient is registered, as opposed to the previous practice of full tax accruing to the union in case of goods destined outside India. So whether it is a IGST or CGST, SGST, all these problems will not be there, because henceforth the location of the recipient of services it will be the place of supply. Similarly, place of supply of transportation of goods other than by mail or courier. See, the section 13(9) of IGST has been omitted. Consequently, the place of supply of services in case of transportation of goods other than by way of mail or courier would be covered under the default provision of section 13(2). It will be determined based on the location of recipient. So it is in line with the above amendment also. In cases where either supplier of services or recipient of services located outside India, the change has significant implications for the international trade, as services to recipients outside India will qualify as exports and services from suppliers outside India will qualify as imports. So now what is import, what is export has been clarified because of these changes in the law. Next slide, please.
Sir, let me just launch one more poll.
Yeah, please go ahead.
Before you go ahead. Yeah. So audience, I'm going to actually redirect all of you for a short while. I request all of you to look at the chat there is a LinkedIn poll that's running right now live on my WebSol, that is our company page. So I'd request all of you to click on the link on the chat and take about 15 to 20 seconds to quickly read the question, input your poll, and come back here. So I will read out anyway the question for the rest of them. So what it says is one key highlight of the 52nd GST Council meeting was the decision to simplify GST return filing. How do you feel about this? So the options are very positive, then you have positive, then neutral, and not sure. So these are the options that are there. I request all of you to take just about 15 to 20 seconds to answer that and then come back and we can continue with the slides. Okay, we have Mr. Nagaraju and Mr. Gajendra who raised their hands. Okay, yeah. If there's any questions that you have, please put it on chat. And of course, if there's anyone who would like to interact directly with our speaker, we will do that towards the end of the session. Okay, great. I think we have about 10 to 11 votes on that end. That's great. So if all of you are done, you can come back to our presentation screen and we will go ahead. Akela sir, I'll go to the next slide.
Yeah.
Yeah. Yeah, done, sir.
Yeah. So there is one other change which is impacting the SEZs, that previously the suppliers to the SEZs used to charge IGST under the claim of rebate and used to make a supply for the authorized operations. But now the 16(1)(d) of section has been added with the words for authorized operations. So only in case of authorized operations only, the SEZ units can receive the goods without the taxes being there. But for all other kinds of requirements, the SEZs are supposed to pay tax and receive the goods only. And then the question remains that whether ITC or such expenses is going to be allowed or not will be a big question. And the second thing is, the units who are making the supply, the amendment streamlines the process and removes the need for an endorsement from a designated SEZ officer regarding the authorized operations as required by Rule 89. And then Noida SEZ has already issued instructions how the online and the document can be generated for confirming the receipt of the goods for SEZ authorized operations. So those who are interested can refer to the SEZ Noida, SEZ DC's instructions also. So it has been clarified on 3rd October 2023, while instruction 95 was amended, that zero rating would continue for the lease rental or other charges collected by the developer from units for setting up of employees welfare facilities like canteen, creche, gymnasium, and other like for the exclusive use of their employees. So there are some issues in the SEZ area wherein the developers used to charge GST for the area occupied by these employee welfare services activities. But now, after this clarification, I think the GST need not be charged on those lease rentals. Similarly, another significant change for the SEZs is that IGST generated supplies are not permitted with payment of IGST and the claim of rebate until they are notified. So this is a clear restriction that those who are supplying the goods to SEZ now can supply under LUT only, but they cannot charge IGST and the claim of rebate and make a separate to the SEZ. But however, in the 52nd GST Council meeting, they have taken cognizance that the difficulties, and they promised that they are going to restore this facility. But today, in the series of notifications and the circulars and all, we could not come across any such notification. Maybe during the day or in the couple of days to come in, that we may be getting this facility also. But for the period from 1st of October, whether it is going to be enabled or it is going to be enabled with a prospective effect, leaving a chance for litigation again, is something which we have to wait and watch. Next slide, please. So notification 48 appoints the 1st of October as the date on which the provisions of the CGST Amendment Act comes into the force. And 49th is the notification for supply of online money gaming, supply of online gaming other than online money gaming, advertisement, and the supply of actionable claims in casinos, etc. are going to be taxed. So what is interesting here is this particular notification is introducing the tax on the online gaming, and the valuation methodology and all are going to be prospective is what the revenue secretary has also mentioned in the press release. But what happens to the current litigation in the Gamescraft case and all, when the law is not very clear on what should be the value on which the tax is to be paid, is something that we got to see, because the matter is already seized at the highest level. And the 50 of 2023 notification has made amendments to the erstwhile 66 of 2017, where for an exemption on advances received in case of supply of goods, to state that registered persons making supply of actionable claims as defined under section 2(102)(a) will be liable to pay tax on advances received by them. This is purely in relation to the online gamings. Next slide, please. So 51 of 2003 has made certain amendments in the Rule 81. This is the category of suppliers who do not need to declare information as required in Part A of the Form GST REG01. So this said rule is amended to include a person supplying online money gaming from a place outside India to a person in India, referred to in Section 14A of the IGST Act, in the list of persons who need not declare the information as required in Part A of the Form GST. So this is also an amendment for online gamers only. So I don't think that in our audience we have got any to further deliberate on this issue. So even Rule 14 is also for them. And all this Rule 31 is actually the valuation mechanism, and the proviso to Rule 44, 46F is also for the online gaming community only. Next slide, please. Yeah, now Rule 64 has been substituted. Form and manner of submission of the returns by persons providing online information. So, and database, this is for OIDR people. So every registered person either providing online money gaming from a place outside India to a person in India, or providing online information or database access retrieval services from a place outside India to a non-taxable online recipient referred to in Section 14, or to a registered person other than a non-taxable online recipient shall file. It is a shall file that GSTR 5A on or before 20th of the month succeeding. So there is a new return which has been prescribed for the online gamers and OIDAR service providers. Similarly, there is a second proviso to Rule 87(3) has been amended to include this online gamers into the network. And also the necessary amendments are made in the registration GST REG 10 also, for facilitating the registration of the online gamers. Next slide, please. Yeah, there are a couple of IGST amendments which have happened. 2 of 23 fixes the date as 1st of October, and 3 of 23 is for online gaming. And again, 4 of 23 designates the Bangalore Commissioner as the nodal officer for registering of the online gamers. Next slide, please. So these are the important things which are getting notified from this morning only. So there is an important announcement in relation to the appointment of the president and members of the GST Council. Now practicing advocates can also be considered to be appointed as member judicial in the GST tribunal, which is going to be constituted shortly. So the modalities were announced. So now the respective states have to be active in nominating the members and getting the work started. And the GST Council recommended to keep the extra neutral alcohol, which is used for manufacturing of alcohol for human consumption, outside their purview. So this is also a very welcome step, because the alcohol for human consumption is in the state jurisdiction. It is not in the common list or in the central list. It is in the state list. Hence, now GST Council is recommended to keep this ENA also, because this ENA can be used for the manufacturing of alcohol for human consumption. Hence, they do not want to tax the ENA. So it is going to be kept outside the GST network, which is a welcome change. But the respective states have to come out with their tax levies on it. And some concession rates were announced in respect of millet-based food preparations and molasses. Already notifications are effective from today. So the interested people can go to the CBIC website and see that, because we could not find time to incorporate those changes in this. And the GST Council has also recommended to exempt the services of water supply, public health and sanitation conservancy, solid waste management and slum development improvement and upgradation supplied to the governmental authorities also. And for this also, the notifications were issued today. And the GST Council has recommended that bus operators organized as a companies may be excluded from the purview of 9(5). This would enable them to pay the GST from their supplies using their ITC. So you know it that bus operators cannot avail the ITC and they are subjected to the GST. But because if it is coming from the organized companies, then they are excluded. So this is also a industry ask, and the GST Council has considered them positively, and the notification is there in the public domain now. And the supply of all goods and services by the Indian Railways shall be taxed under the forward charge mechanism is a very significant departure, because any supplies made to governmental authorities are taxed under the reverse charge. But now the railways have come under the forward charge because they are having a lot of credit pool which they want to make use of, and the government is permitting the same. So a clarification will be issued on the corporate guarantees and their tax liability, which has not yet seen the light of the day today. And the provision for automatic restoration of the provisionally attached property after the completion of 1 year. So these instructions are also yet to come. So this brings me to the end of my presentation, because that now we are left with 10 more minutes of time for taking questions.
Yeah.
So if there are any questions, then certainly that I would like to answer. There is one in the Q&A box. No, so can we get the GST amendment slides via email? The answer is yes.
Yeah, that will be addressed. Not a problem.
And Manasa has raised her hand. She wants to ask the question directly.
Yeah, Ms. Manasa, I'll just allow you to talk. I think there's also Mr. Sanjeev. Just a moment. Yeah, you should be able to talk, Ms. Manasa.
Yes. Am I audible?
Yes.
Yes, please.
Sir, I have one question with respect to e-commerce operator.
Please.
And e-commerce operator were not allowed to enter into a composition levy, but now as per the rule, they can have that composition levy scheme. And there they mentioned that still they are restricted to avail the benefit. What does it mean, sir?
See, composition dealers are not supposed to make interstate supplies. So even when you are in the e-commerce portal also, that your supplies should be restricted to intrastate only. You cannot extend yourself to interstate.
That was a common thing, no, sir, for all the composition scheme
Yes.
payers.
Yes.
Common thing.
Yeah. The same thing that they are saying once again, because see, the thing is that in the e-commerce, you can always take a plea that I do not know where the customer is.
Yes.
Because he places the request online, but you may not be knowing, but the e-commerce platform provider definitely knows where the goods or services are to be delivered, right?
Yes, sir.
So he should be extra vigilant while rendering these services on your behalf to restrict them intrastate, not to extend them to the interstate.
Thank you, sir.
Okay. Thank you, Ms. Mansa. Let me just enable Mr. Sanjeev to talk. Mr. Sanjeev, you can actually unmute and talk, sir. Mr. Sanjeev? Okay. We'll just keep it on hold. I think, sir, we can address a few other questions in between. Mr. Gajendra has a question.
Yeah, Gajendra has come out with a query saying that what are the consequences of non-compliance with Circular 170 regarding changes in the GST or 3B ITC disclosure? What are the consequences of not following the circular with respect to the changes in the 3D ITC disclosure? I think that this 170 circular talks about the ineligible ITC disclosure, right? So if you are not going to follow this circular, that the consequence would be that you will be visited with a show cause notice, sir. Because that if the instructions of the government are not followed, that it is no brainer that the consequence would be in the form of a show cause notice with a proposal to levy penalties and others. Because when you are ready for compliance, yeah, your compliance should be 100%. There cannot be any kind of a deviation in it. So if the circular says that you have to comply, circulars normally are binding only for the officers and not for the trade. But certainly, if there is an information request for you, then you need to comply with it. There are no two ways of looking at it. Yeah,
Okay.
any other queries?
Yeah, Mr. Sanjeev, are you there? I can enable you to talk actually.
Yes, sir.
Yeah.
I'm sorry. Sir, actually, my question relating to declaration of opening balance of accumulated ITC reversal.
Sir, somebody has to mute himself. That there's a lot of background voice.
I think there's some disturbance at your end, sir. But yeah, that's about it.
Yes, sir. This is actually related to the opening balance of accumulated ITC reversal. We have already filing GST 3 and we have passed the unadjusted IT, unreconciled ITC in the table B of 4. And so already we have passed the ITC, and once again we have to declare the same balances in the declaration format.
See, you are saying that whatever is the ITC which is ineligible in your hands, that you have already written off in the books. You are saying that?
No, this is not the ineligible ITC written off. This is the ITC which have not been reconciled with the GST 2B. And party has not filed a return. It has not come to our GST 2B. So we park the ITC for claiming in the next month.
But how long that you are going to park it, sir? There is a circular 183 wherein that if the amount is less than 2 lakhs, then a self-declaration will do. And if it is more than 5 lakhs, then the chartered accountant has to give a certificate that they have collected the tax from you, remitted the same to the government, and filed the returns also. You have to start collecting such kind of documents in order to secure your ITC. Otherwise, for how long that you are going to park this credit aside? Not by not claiming. So refer to circular 183, sir, please. That will solve your problem.
Okay, sir. Thank you.
Yeah, please.
Okay, thank you, Mr. Sanjeev. Anyone else who would like to ask queries? If there's anything on chat, we can even allow you to talk. If there's anyone else? Okay, audience,
Is
anyone?
it the case that the people are already in the festive mood?
We cannot rule out that possibility, can we?
Yeah, maybe the timing why that we have planned it today is that we thought that the 52nd GST Council announcements also will be available with us. But unfortunately, that they started coming only since morning. But otherwise, that it would have been lovely session for us. But another issue also that this long weekend and all, I think Srinivas Raidu has raised his hand.
Yes, sir. Yes, sir. Yes, sir. I think I can enable him. Mr. Srinivas, I think he was there, but Mr. Srinivas, do you have any query? We can. Okay, just a minute.
Yeah, I think he has a query.
Yeah, you can unmute, sir, now, Mr. Srinivas.
Please go ahead, sir.
I think he's unmuted, but we can't hear
Srinivas
him.
Raidu, you can go ahead with your question, sir.
No, I think there's some problem at his end, sir. He's unmuted, but we can't hear him. Yeah.
Okay, any other questions?
Srinivas, if not, you can put it on chat. I can still, yeah. I just asked you to unmute again. Can you just try one more time, sir? Yeah, I still cannot hear. Okay, that's fine, sir. You can actually type it on chat. We'll address that. Not a problem. Okay, in the meantime, any other questions, audience? Mr. Chetan, Mr. Jitesh, Mr. Gajendra. Okay. There's a question from Mr. Gajendra. Is declaration of opening balance ITC related to something which is not accounted ITC but available in 2B?
Sir, this question itself is very peculiar, Mr. Gajendra. See, the thing is that if it is not availed by you, it is not accounted by you, but it is available in the 2B, that you have to just find out, because that it is the case that you might not have received the goods, but still that the other end, the person may be thinking that he has delivered the goods to you. So there can be issues in relation to the payment also against this supply. So you have to inquire from your supplier side. That is the reason. If you go with the automation tools like flow tax and all, so this kind of a problems will not be there, because that they have got the APIs and all, which will give you that whosoever has raised any kind of EBA bills on you or invoices on you, that with their ERP systems in place, that they will be able to tell you in advance, so that you will be sure that whether your PO has been issued or not, and why this person is giving you some supply. Such a kind of things will be easily known to you. So automation of your GST systems is the need of the hour. They are all service related invoices. So if you have not received the service or not accounted for the service, but the other end, the provider is thinking that he has rendered the services to you and he has paid the taxes and uploaded in the GSTR1, then it will get reflected in the 2B. But if you have not received it, definitely it will lead to confrontation between you and him with regard to the payment. So you have to take it up with your supplier to find out why at all the invoice has been issued when the services are not actually rendered or not rendered to your satisfaction. That is the reason you did not account them. Hope I am clear, Gajendra. Thank you.
Okay, okay. Sir, if I think Mr. Srinivas is still trying. Mr. Srinivas is still not able to hear you. But that's fine, sir.
But
I mean,
he doesn't want to type also. Fine.
Yeah, sir, you can actually type. We'll address that. Anyone else in the meantime with any queries? Anything related to what we covered today? Or even it can be something GST generic, we will be able to attend that. Okay, I think there's one more from Ms. Manasa. Yes, Ms. Manasa, you can talk.
Hello, sir. I just need one suggestion from you.
Please.
So recently I passed out from MBA Core Finance. So is it good being an MBA student to go for indirect taxation or to go with the derivatives? Because my interest lies in both of the subject. So I'm a little bit confused.
You have heard my introduction.
Yes.
So what is the answer?
You came from an engineering background and you also did an indirect taxation and you're also a lawyer.
Yeah. So see, the thing is that we start off with something in our mind. Over a period of time that we realize that that is not the place where we have to be, or that our interest is not lying there, then life always gives you an opportunity. So when the right time, the right opportunity knocks your door, that you have to just be vigilant and to open it and accept it. So go with that right, there your passion is, there the destination is for you.
Okay. Thank you, sir.
Right? Okay. So any questions, audience?
Yeah, there is one query from Leo Xavier that
Oh, yeah,
job
it's
work
there.
for food and food products GST rate is 5% or 18%, sir. We have to see exactly what is that job work that you are doing on which product. So that will decide, but there is no blanket rate of 5% or 18%, but most of the job works are at 18. So, but we got to see specifically your case, and then only we can answer it. So I don't think that there will be any more questions. This is the first ever time in 2 years of my association with WebSolve that I am closing exactly on time. Maybe that I just exceeded by 5 minutes.
Right,
Normally, it is never the case for me. But good that because of the considering the long weekend and the festival ahead for you, that I wish all of you a very happy Dashra. And thanks for attending this session. That there will be some more interesting sessions which are going to come up in the due course of time. So please be with us so that we'll be happy to again chat on these issues.
Absolutely.
Thank you.
Thank you so much for your time, Mr. Akela. Thank you, sir.
Thank you. Thank you, sir.
Yeah, thank you, audience. I think as mentioned, we will share the post-webinar mailer with Mr. Akela's details, the presentation, and the recording as well. And those of you who have shown interest for our demo of flow tax, my team will reach out to you in the next 2 to 3 working days, and we'll arrange a demo for you. Thank you all and have a wonderful weekend. Thank you all.